Welcome to the Deep Dive. We're here to cut through the noise and get you those essential insights. So let's paint a picture for a second. You might be navigating something really significant, maybe emotionally charged, definitely financially weighty, perhaps a divorce, settling an estate, or maybe you're just looking at a property tax assessment that feels, well, wrong. In all these cases, there's the single number, the appraised value of that real estate, that can just have huge implications, financial, legal, everything. Getting that number right, making sure it's accurate, unbiased, totally defensible. It's not just important, it's absolutely critical. But here's the tricky part. Finding the right professional for that kind of specialized private appraisal is not as simple as, a quick Google search. So this deep dive, it's all about pulling back the curtain on how you select that right person. We're moving way beyond the everyday mortgage assessment. We're really zeroing in on those crucial private valuations that genuinely impact your life.
Exactly. And our mission today really is to equip you, our listener, with the knowledge to navigate this because it can be a complex process. We want you to have clarity, confidence. We're going to highlight what to look for and maybe even more importantly, what to actively avoid. We want to make sure you get a truly unbiased, competent, and defensible valuation because, and this is something we just can't stress enough, all certified appraisers, and frankly, all appraisals are absolutely not created equal. There's a real difference, huge difference in quality, suitability, especially when the stakes are this high for you, financially, legally.
That's such a key point. It really makes you pause, doesn't it? Because I think most people probably assume, well, an appraiser is an appraiser. They're certified, they know real estate. So why is an appraisal for something like a divorce or an estate settlement or that tax appeal?
Yeah.
Why is it fundamentally different from just getting a mortgage appraisal? What really sets these situations apart? Why can't just any certified appraiser handle them?
Yeah, it's a great question. Very common one, too. And it really gets to the heart of the matter. You see, we've seen this big shift in the appraisal world, especially since, around 2022 when interest rates started climbing, that rise in rates. It dramatically slowed down the mortgage work, which for a lot of appraisers, that was their bread and butter. So understandably, many appraisers started taking on these non-lending jobs, private appraisals, but they didn't necessarily have the required competency or the specialized experience for these really unique situations. They're trying to keep busy, sure, but it creates a potential problem for you, the client, because the nuances, they're totally different. We often see reports, done for private individuals, but they're put together on standard lending forms or formats.
Right, the forms you'd use if you were just getting a loan from the bank.
Exactly. And the core issue there is that these standard forms, they just don't meet the specific needs or the legal requirements for private situations like a divorce or an estate. It's kind of like trying to use, a basic 1040 easy tax form to report complex international business income. It just doesn't work. It doesn't capture the detail. Lending forms are built for one thing, telling a lender the current market value. That's it. They often lack space for the legal context or maybe a specific retrospective date, like valuing property as of the date of separation in a divorce. That's critical. Or they lack the really in-depth narrative and market analysis you need for a report that might, end up in court or get scrutinized by the IRS. A lot of it just boils down to a lack of experience in the non-lending side of things. It's like having a basic toolkit when you need specialized instruments.
Okay, so it's not just about having the license. It's about having the right tools, the right expertise for the specific job you need done. And I guess this ties right into that common pitfall people face, choosing an appraiser just because they have the lowest fee. It's tempting, right? Save a few bucks up front. But what's the real danger there? What could go wrong?
Oh, absolutely. It's a classic case of you get what you pay for, or often much less. Choosing the lowest fee can be a huge trap. We've seen it so many times. It leads to a product, an appraisal report that's just insufficient, and it ends up costing way more in the long run. Like we saw this one situation, an estate appraisal, the client saved maybe a few $100s on the initial fee, seemed like a good deal, but the report, done on a lending form, lacked the detail the IRS needed. It got rejected. So the client ended up needing a whole new appraisal, a proper one this time. Plus, they racked up thousands in legal fees and dealt with huge delays, all because that first cheap report couldn't hold up. Yeah. For something this critical to your financial future, this is not the place to cut corners. A really low fee, it can honestly be a red flag. It might mean the appraiser lacks the specialized experience, or maybe they don't have the right tools, or they're just rushing to deliver something cheap that won't actually serve your needs.
That makes total sense. The upfront cost might look good, but the potential long-term cost, if that appraisal isn't solid, it could be massive. Sounds like investing in the right appraiser from the start is really a form of risk management. Okay, so if competence is the absolute key, we need to be proactive here. What specific credentials, what experiences should someone really scrutinize? When you're hiring a private appraiser for these non-lending needs, what's on that essential checklist?
Absolutely. Being proactive, asking the right questions, that's crucial. So here's what you need on your checklist when you're vetting potential appraisers. First, look at their basic credentials. Their certification level. Are they a certified residential or a certified general appraiser? That matters depending on the property type. Then look for designations. We can talk more about those. Check out their professional website, look for online reviews, basic due diligence stuff.
Okay, designations, you mentioned those. What should we look for there?
Right. Look for advanced ones from reputable organizations. They signal a higher level of commitment and expertise. For instance, someone might be an IFA, that's a designation from the National Association of Independent Fee Appraisers, or an ASA, that's an accredited senior appraiser from the American Society of Appraisers. These aren't just letters after their name. They usually mean more education, peer review, adherence to higher standards than just the basic state license. But okay, beyond those basics, you must ask about their experience with the specific purpose of your appraisal. This is so important. Ask them point blank. Have you done appraisals for divorce cases before? How many? Do you understand retrospective valuation? Or do you have experience with estate appraisals that meet IRS requirements or assessment appeals? Pre-listing, purchase. Each one has unique quirks, legal precedents, reporting needs, and experienced appraiser gets that. And definitely ask about their experience with IRS requirements if it's relevant, like for estate tax filings. Also, and this is huge, if there's any chance it might go to court, which happens a lot in divorces or estate disputes, ask about their court or expert witness experience.
Why is that so important?
Because it tells you they understand the pressure cooker of a legal setting. They know their report might be torn apart under cross-examination. They know how to build a report that's not just an opinion, but a defensible analysis right from the start. And one last really vital caution. Try to avoid appraisers who only specialize in bank or mortgage appraisals when your needs are non-lending.
Even if they're certified.
Even then. Their expertise, while fine for mortgages, often doesn't translate well. Their training, the forms they use, their typical scope of work, it's just not geared for the complexity of private, personal, or legal situations. It's not just about the license. It's about the right kind of experience, the specific competency for your job.
That's incredibly helpful. So it's the type of experience and familiarity with the specific context that really matters.
Huge
Distinction. Now, let's touch on something maybe a bit more subtle, but just as dangerous. Potential bias or advocacy. Sometimes you might get recommendations, maybe from your attorney, maybe even from the court itself. Seems reputable, right? But how do you navigate that, especially if there's a risk, even an unconscious one, that the appraisal might lean one way?
Yeah, this is a critical point. It really touches on the ethics of the profession. Impartiality is paramount. We've definitely seen a trend of some larger firms getting recommended, especially in places like Cook County, where there's a lot of litigation. Now, on the surface, a big firm sounds good, resources, reputation. But what we've sometimes seen happen is that maybe an inexperienced in litigation residential appraiser is the one who actually views the property, does the field work, writes most of the report. Then maybe a very credentialed supervisor would sign the appraisal, sort of as backup, maybe for added credibility.
Yeah, if allowed.
Well, a supervisory structure itself isn't wrong. But the problem comes in if this practice leads, even unintentionally, to advocacy for the side they represent. If it results in, an obvious direction in value that may favor only one side. Think about it. If one party in a divorce wants to buy the other out, they might subtly hope for a lower value. If someone else needs a higher value for tax reasons, well, you see the potential. But the appraiser's job isn't to hit a number for the client. It's really crucial to understand this. Appraisers, under our ethical rules, specifically SPAP, the Uniform Standards of Professional Appraisal Practice, we absolutely cannot advocate for a client, period. Our only role is to support the facts. We have to take all goods and all bads, meaning all the positives and negatives, all relevant factors into consideration, impartially. Doesn't matter who hired us. Doesn't matter what number they want. So if you're working with lawyers or the courts and they suggest a firm, you need to dig a bit deeper. You should absolutely verify that the person actually completing the appraisal, doing the real work, is experienced in these non-lending, potentially contentious situations. And critically, make sure any supervisor signing off is truly involved in the process, not just rubber stamping something. You need factual integrity, not a hidden agenda.
That's a really powerful way to put it. Advocating for the facts, not the client, puts a responsibility right where it belongs on the appraiser's objectivity. But isn't there always that sort of temptation? to want to please the client who's paying the bill. How do the real pros handle that pressure?
That's a sharp question. And yes, the pressure can be there. Sometimes it's subtle, sometimes not so subtle. But a truly professional, ethical appraiser, they understand their entire reputation, their credibility, their livelihood hinges on their objectivity. They navigate it by sticking rigidly to US PAP, treating every single assignment with the same impartiality. They focus only on the market data, the property itself, the specific definition of value needed for that assignment, regardless of what the client hopes for. Good appraisers communicate that up front. My job is to give you an unbiased opinion, not to be your advocate. It's about setting clear expectations, and then you rigorously follow the data wherever it leads, even if the client isn't thrilled with the result. Integrity first.
That clarifies so much. It really sounds like the absolute key is finding someone who embodies that commitment. Factual integrity, deep, specialized experience. So to make this really concrete for our listeners, let's talk about a benchmark. What does good actually look like? The source material mentioned Ernie J. Ramos as an example of strong qualifications. Could you walk us through his background? Give us a profile of what to look for.
Absolutely. A concrete example really helps crystallize what robust qualifications look like in the real world. So Ernie J. Ramos, for instance, his profile shows the kind of depth you should seek. His core qualifications, he's an IFA, that designation from the National Association of Independent Fee Appraisers we mentioned. He's also an ASA, the accredited senior appraiser from the American Society of Appraisers. And he's an IL certified general real estate appraiser.
So certified general, not just residential.
Right. Which means he's licensed to appraise all types of real estate, regardless of complexity or value, including commercial properties. That combination of state certification and those advanced designations, it speaks volumes. Commitment, advanced education, broad expertise. Geographically, he's based in the Mocana-Tinley Park, Frankfurt area, comes from the SW areas of Chicago and suburbs. But importantly, his experience covers throughout Chicago and suburban areas. Deep local knowledge is invaluable. He actually has a degree in computer electronics from DeVry. Now, that's not appraisal specific, obviously, but it does suggest a strong analytical foundation, problem-solving skills. And critically, he has extensive appraisals education on top of that, earning those NIEFA and ESA designations. That shows ongoing professional development, experience-wise, over 22 years of commercial and residential experience, and importantly, a large residential mixed-use and multifamily focus. That breadth means he's not just a single-family home specialist. He can handle complex properties. What's also really telling is his commitment to the field. He's described as very active with many of the most well-known, active, and versed appraisers across the country on a daily and weekly basis.
So he stays connected, stays current.
Exactly. He's engaged with best practices, knows what's changing in the industry, learns from his peers. That's huge. And maybe one of the most compelling parts of his background, his mentorship. Mr. Ramos was also mentored by the late and great Robert W. Schlitz, M.A.C.A.E.R.E.S.C.I.A.O.
Wow, that's a lot of letters. What do they mean?
They mean Robert Schlitz was an absolute giant in the field. MAI is the top designation from the Appraisal Institute. CAE is Certified Assessment Evaluator. RES, Real Estate Specialist. CIAO, Certified Illinois Assessing Officer. This guy was a former Director of Commercial and Residential Real Estate for the Cook County Assessor back in the 80s and early 90s. And he was known as one of the absolute top-tier experts in the real estate appraisal field and litigation from the 90s right through 2012, being mentored directly by someone like Schlitz, someone with that depth, that litigation experience, that ethical reputation. That underscores the kind of profound, practical, real-world knowledge someone like Mr. Ramos brings. It's that kind of deep foundational learning from the best. That's really what you should be looking for.
That's a fantastic example. Really paints a clear picture of the depth, the expertise, the ethical grounding that's just so vital here. Sets a high bar. Gives listeners something concrete to measure against. Okay, we have covered a lot of ground today. We started by highlighting those distinct needs of private appraisals, divorce, estates, tax appeals, and how they're really different from mortgage work. We dove into the dangers, right? It was inexperienced appraisers working outside their lane, falling for that low fee and ending up with bigger problems, financially, emotionally. And we armed you with those crucial questions: what to ask about credentials, specific experience, court experience, ethical stance, how to really vet a professional.
Right. And as we wrap up this deep dive, maybe leave you with this final thought. In these situations where real estate value directly impacts your future, your family, your finances, your legacy, the value of that appraisal, it's way more than just the number on the page. It's the foundation of fairness, of legal solidity, of peace of mind, really. The true cost isn't just the fee you pay that appraiser, it's the security you get knowing that the report is truly unbiased, expertly done, and that it will stand up to whatever scrutiny it faces. So it would encourage you to really think about that. What does it truly mean to have an unbiased assessment in your corner? And how does that unwavering commitment to objective facts impact every single aspect of your situation, far beyond just the dollar amount? What does that commitment mean for your future? And are you willing to invest in getting it right?